Hey everyone, welcome back to the Brent Bruce Daily. Today is July the 12th, 2022. It is 1:25 Central Time. We're going to take a look and see where interest rates are right now, but really want to talk for a minute about why we are patiently waiting. We're patiently waiting for the Consumer Price Index report that's coming out tomorrow because this is a measurement of inflation. And if you watch the Brent Bruce Daily, you know that inflation is really what's been moving the market for the past year. Inflation is why we went from having interest rates in the twos to having interest rates in the fives and touching the sixes at one point. So we've had some dramatic increase, all surrounded by the impacts of inflation. So the consumer price index that's going to be coming out, we're anticipating is going to be, people are saying that it's going to come in with pretty high inflation. And if we have a high inflation reading, the mortgage-backed security market and mortgage bonds do not like inflation. So we might see a negative impact to our home loans, meaning they might be going up on us. So if we take a look at the charts here today, we've been pretty flat. Okay, so we're flat on the mortgage-backed security, only down 2 basis points. However, you see a lock indication here, and that is because we actually had a report come out on the 10-year Treasury sale today. There was a 10-year Treasury sale that it looks like didn't do very well, which is why we're seeing the mortgage-backed security market go down to -2 when we were up 22 earlier today. So you see the new indication right here. The 10-year note auction was met with below average demand, which is causing home loan interest rates to kind of react negatively to that, which is why you see a lock alert. And you're seeing over here, red is bad. Coming down here to this 25-day moving average, we may break through that. So there is concern that we may actually see interest rates get worse in the last few days, especially if we get a report of high inflation tomorrow with the CPI. So if you want to pay attention to that, as you're learning more and more about how home loan interest rates move based on what you're seeing on the reports, you're going to start to say, hey, I know what's about to happen. I know home loan interest rates are going to go up today because of knowing what happened with the consumer price inflation report. So if you see reports come out and the news is saying inflation came in hotter than expected, home loan interest rates will probably dive. When I say dive, again, this is an inverse report, meaning that they'll drop down here at least to this Fibonacci level, maybe even lower, all right? And that is going to cause our home loan interest rates to go up, okay? So we're going to take a look and see where we are today. Yesterday, we were talking about a 5.375% interest rate. Let's take a look at the market here for the Brent Bruce Daily scenario. We're going to pull that up and see where we are. All right. Again, this is a very well-qualified 30-year fixed conventional home loan, the best of the best. And where are we today? 5.3 is where we were yesterday with no points. Today, 5.3. Okay, so not seeing a lot of movement because of, look at the charts that I just showed you. Down now 2 basis points. The 10-year is down 10. Not a big movement there. Stock market in general, I pulled this up here, pretty flat. Everything is pretty flat. And it really looks like what they're waiting to find out is a report that comes out tomorrow, the CPI, which again is the Consumer Price Index that talks about inflation. So let's just see how much you've all learned here. And when the CPI comes out, if you hear them talking about inflation being hotter than expected, or even something like inflation continues to be very hot, the core CPI reading coming in at 8.9, something like that, then home loan interest rates will probably get worse. So let's just see if we're correct. We will see you tomorrow, and we'll talk to you then. Have a great day.